Hey, good morning, everybody. Today is Friday, February 13th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video review. Wow. Yesterday was a great day for the bulls as the NASDAQ and the Russell 2000 both closed above significant areas of resistance. We've got a lot to cover, so let's get started by taking a look at the Russell 2000. What we're looking at here is a weekly chart of the Russell 2000. We've been watching this March 2014 high area of resistance in the Russell 2000. I've thought for a while that the key to the market going forward is being able to take out the 2013 area of resistance that goes back all the way to March of last year and pushing higher. Yesterday we did that. We closed above that 2013 area. The next real test for the Russell 2000 is this kind of tiddling area of resistance in the 1222 area. If we can take that out with any gusto, I think that probably the next move in this market's going to be at least a little bit higher, if not significantly higher. The market is now at historic levels. There has never been a bull market that has gone on as long as this one has, going back all the way to March of 2009. We're coming up on the 6th anniversary of the bull market. There's nothing to say that this market can't go significantly higher. Let's take a look at the NASDAQ composite. NASDAQ composite yesterday was up 56.43 points. That's 1.18%. NASDAQ gapped above this resistance area first thing in the morning and never looked back, closing at the high of the day. Trading volume was very heavy. It was higher than the prior day, which is the definition of accumulation. It was also above average, which shows significant institutional buying in this market. It's the institutional buying that we're trying to get out in front of. Where the money is made in the stock market is by identifying the footprints of the institutions in the market. Right now on the NASDAQ, we are on a margin signal, indicating that aggressive traders can leverage up their portfolios. Conservative traders want to be fully invested at this point and want to have jettisoned the weaker positions in their portfolios. Taking a quick look at our MACD histogram, we see yesterday we closed above the zero line. Our MACD histogram is in an uptrend. Closing above the zero line is bullish. Being in an uptrend is bullish. Our immediate bias on the NASDAQ composite is bullish. Before we move on, I want to take a quick look at this area of resistance. Because we've broken above that area of resistance, that now becomes support. Typically, I don't identify it as support until we've held that area for a couple of days. Because we've taken out this area of resistance, the NASDAQ composite has reconfirmed the uptrend that we've been in. It also has reestablished a short-term uptrend. Right now, we're on a short-term, intermediate term, and long-term uptrend in the NASDAQ, and we'll see where we go from here. Let's take a look at the S&P 500. The S&P 500 yesterday closed up 19.95 points, just a shade under 1%. The S&P closed right at the top of its daily trading range. It's coming up against resistance in the 2094 area. We'll see if we can take that level out. If we're able to take that level out, that will change our short-term trend on the S&P to up. The trading volume yesterday was higher than the prior day, but still below average daily. Technically, it was an accumulation day and a day of institutional buying or professional buying. Right now, the S&P 500 is in a confirmed uptrend. It's been in a confirmed uptrend since January 8th. Yesterday, the NASDAQ reconfirmed that uptrend, and so we're no longer in an uptrend under pressure. In addition, we lose another distribution day today, which leaves us with 4 distribution days in the past month. Tomorrow we'll lose another distribution day, which will leave us with just the 3 distribution days. Over that same period, we've seen some significant accumulation. We have 1 accumulation day, 2, 3, 4, 5, and yesterday was a 6th accumulation day. That compares to 4 distribution days today, 5 distribution days, 3 distribution days tomorrow, assuming that today isn't a distribution day. What that means is we're seeing significant professional buying in the market. It's that professional buying that we're trying to get out in front of. It's the professionals that move the market. Professionals aren't able to jump into positions all at once. They have to accumulate positions over a period of time. And they leave footprints. Accumulation is the footprints of those professional buyers, the institutional buyers. On our 1 to 6 month timing model, we are on a margin signal. As we mentioned before, the S&P 500 has significant resistance in the 2094 area. We now have minor support in the 2064 area, so we're trading in a very, very tight trading range right now. Taking a quick look at our MACD histogram, we see that we are trading above the 0 line, which is bullish. We're trending upward, which is bullish, and so our bias on the S&P 500 is bullish. Yesterday, we bought Palo Alto Networks for our aggressive trading portfolios. This was not an ideal buy, and so it's important that if you're going to follow us, that you maintain stop discipline on this one. Day before yesterday, Palo Alto broke above this 5-week flat base on fairly weak volume. You want to see a breakout on at least 40% above average daily volume. We didn't get that the prior day. Then the stock gapped higher in the morning, and it looked as if volume was going to come into the position. The volume never did come into the position. The position weakened throughout the course of the day. And so the breakout here is just a little bit suspect. You may want to be careful with this one. I would stop the position right at the 130 level, maybe 129.95. Finally, this morning, we will begin to hedge and take some significant profits in our RSI-2 daily weekly strategy. Subscribers, please check your spreadsheets for details. If you want to talk about our hedging strategy. If you want to talk about trading strategies, please feel free to give me a call, drop me an email, or if you'd prefer, make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the home page. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, please take a quick look at our disclaimer video posted below this one. Again, my name is Cliff Backus. That's your daily market review. Have a safe and profitable day. Keep your stops in place. Monday is the President's Day holiday. Markets are closed, and so we won't see you again until Tuesday of next week. Have a happy Valentine's Day, everybody. Be safe, and we'll see you on Tuesday.